Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities continued the positive momentum as a series of strong US economic data allayed fears of an economic contraction, boosting risk sentiments. The US core retail sales exceeded expectations in July amid declining jobless claims and a roughly in-line core CPI print, while industrial production missed expectations. In the US, the S&P 500 Dow Jones Industrial Average rose around 3 to 4%, while the tech-heavy Nasdaq Composite rose 5.2%. Asian equities trended positive, with Korea, Singapore, Taiwan, and Philippines up around 4 to 5%, driven by strong foreign investor inflows, even as economic data remained weak in China. July activity data from China pointed to a weak start to Q3 of 2024, with largely in-line industrial production and retail sales amid sharply falling fixed asset investment growth. Credit demand remained weak, with new RMB loans under TSF turning negative in July for the first time since July of 2005. Back home, Indian equities recovered after 2 weeks of consolidation. The Nifty index rose 1% over the past week, supported by upbeat global risk sentiments, positive earnings reported during the week, and a sharp drop in domestic CPI inflation, even as foreign investors continued to pull out of Indian equities. Broader markets performance was mixed, with the Nifty Midcap Index up 0.8%, while Nifty Small Cap Index was up 0.1% for the week. Among sectors, IT and realty led the winners, with gains of over 3% during the week, while energy and PSU banks led the losers with cuts of over 1% during the week. The Indian fixed income market had a mixed week, with Indian government bond yields at the shorter end rising, tracking the movements in US bond yields after upbeat economic data in the US eased expectations of a deeper rate cut in the upcoming policy meeting, while domestic investors remain concerned that the sharp decline in CPI inflation during this month was driven primarily by large base effects. The 10-year Indian government bond yield fell 1 basis points to close at 6.87%, while the 3-year and 5-year Indian government bond yields rose 9 basis points and 10 basis points respectively. The INR rose 0.1% against the USD to close at 83.88 per dollar, as falling crude oil prices, lower US bond yields, and a weaker USD negated the impact of foreign investor outflows from domestic equities. INR gold rose 2.7%, Brent crude oil fell 2% on Friday, pairing weekly gains to close flat at $79.6 per barrel, as investors tempered expectations of demand growth amid weak economic data from China. Now, coming to the macro updates for the week, the first was on India's consumer price inflation, which fell sharply to 3.54% in July of 2024, compared to 5.08% in the earlier month, and lower than market expectations of 3.67%. This was the first month that the inflation rate fell below the RBI's target range of 4% in nearly 5 years. This decline, though, was driven primarily by large base effects in food article prices. The cost of food, which represents half of the Indian consumer basket, rose by 5.45%, slower than a 9.4% surge recorded in the month of June. In the meantime, prices declined at a faster pace for fuel and light. On a monthly basis, Indian consumer prices rose by 1.4%. Second data was on India's merchandise trade deficit, which widened to $23.5 billion in the month of July 2024 from $21 billion in the previous month. Imports grew 7.5% year-on-year to $57.5 billion as energy prices increased the turnover of India's crude oil imports, which stood at $13.8 billion. Additionally, gold imports rose by $70 million to $3.1 billion, supported by the reduction in custom duties for gold imports in the latest union budget. In the meantime, exports contracted by 1.5% annually and stood at $34 billion. The final data was on India's wholesale price inflation, which rose 2.04% year-on-year in the month of July 2024, compared to a 3.36% rise recorded in the previous month and below market forecasts of a 2.4% gain, driven by a slow rise in food article prices. Primary articles and food index rose softer due to a plunge in vegetable prices and a slowdown in paddy prices. Meanwhile, manufacturing prices increased more, marking the highest rise since February of 2023, mainly driven by rises in pharmaceuticals and medical chemicals and wood products. Also, fuel and power prices accelerated, driven by rises in the LPG prices. On a monthly basis, though, wholesale prices grew by 0.84%, accelerating from a downwardly revised 0.3% gain in the month of June. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.